Have you been wondering what's going to happen to this country? Are you afraid what the direction it's going? Are you afraid of like what's going to happen to your finances, with your retirement plans, or anything for that matter? Heck, should we even be storing money in gold? Can we even trust the US dollar? That's what we're going to be covering today with Alastair MacDonald. Hello, my fellow Ripplers. This is Chris Miles, your cash flow expert and anti-financial advisor. This show is for you, those who work so freaking hard for your money, and you're now ready for your money to start working harder for you today. You want that freedom and cash flow now, not 30 or 40 years from today, but today, so you can live that life that you love with those you love. But more importantly, guys, it's not just about living rich, it's about living a rich life. Because as you're blessed financially, you have the greater resources and means to bless the lives of those around you and create that ripple effect. Guys, thank you for tuning in because you're allowing me to create a ripple effect in your lives as well. Appreciate all you guys have been binging and sharing. Heck, some of you guys have gone back hundreds of episodes before, and you're probably even running out of those. So appreciate some of you guys I know have been around here. Shout out to you that have been following us for really the last decade plus. So thank you so much for doing so. All right, guys. So I'm excited right now because having Alistair on here with us is a treat. I have been trying to get Alistair on for the last couple of years, and we kind of joked about it a few weeks ago when we saw each other, and really excited to have him here because Alistair, I'll get his story in a minute, but man, like you guys, like this guy, born in Africa, raised there, raised with hyperinflation. I mean, hyperinflation. You think you've had hyperinflation? Wait till you hear what Alistair has to talk about running a business during hyperinflation, real hyperinflation, and even moving here to the States. And he has just an amazing perspective on, really the world, the psychology, economics. I mean, and he has an amazing worldview that I want to make sure we have on the show. And I know it's a special treat for you guys to have today. So excited to have him on. So Alistair, thanks for joining us today.
It's a pleasure, Chris, and it has taken us a while to make it happen. So I'm stoked to be here.
Absolutely, man. So I told him a little bit about your background, but fill in the blanks. Obviously, I didn't tell him hardly anything with what you've experienced in life. Give us a little bit more background on you.
So I'm a fourth generation African, born and raised in the country of Rhodesia as it was going through a violent civil war and becoming the new nation of Zimbabwe. And this meant a number of novel experiences unique to my generation. I was the first generation to go to mixed schools. I grew up, as I say, in a horrific civil war. I lost friends, I lost family members just as a child. A violent and confusing time, and this the majority as the minority white control moved to majority black control in the nation. Powerful time in African history. We were kind of at the tail end of some of the post-Cold War whipsaws being felt around the world.
Mm.
I was raised by a family, a multi-generational family of entrepreneurs where everybody had their own business, started their own business. Nobody worked for each other. They all, even intergenerationally, it was kind of just written into the DNA that you would start out and do your own thing. So I left high school and went straight into business, started my first business. I just turned 19. It was a safari business. And as with so many things in my life, just absolute good fortune of a strong tailwind, unfortunately making me feel wiser than I actually was. So I enjoyed some degree of success early on that led me into the venture capital business and simultaneously expeditions. So I did expeditions for French film crews, for individuals from the Smithsonian Institute. I did a cover story for National Geographic. It was really a life and a time of just radical adventure, grossly overpaid, a young guy just absolutely living a life of true adventure. I then lived through, as you alluded to, what turned out to be the greatest hyperinflation in history, which was phenomenal. It's really worthy of its own conversation. And then that took me, emboldened by the modest successes I'd enjoyed at a young age. I moved to the United States, where I summarily got my posterior chain kicked for several years as I realized how difficult it was for me to integrate into the American way of business. It felt like it took me several years to even metaphorically speak the language. Uh, and that was an interesting transition. I worked on Wall Street. I then got into the brokerage, asset brokerage world. That led me into direct asset management. I built and ran a fund uh, tremendously successfully for our clients through the financial crisis, the housing bubble, two of which were I was fortunately in anticipation of. That made a big difference for a lot of people that I cared about and served. I I left that business in 2015, started a veterinary hospital, a little scrappy veterinary hospital. I'm not a veterinarian, and ended up building what I consider as a really successful veterinary hospital, large facility, multi docks, and sold that to a private equity group in 2020, 21. I moved to Puerto Rico for several years. And as it stands now, I manage, I own dental practices, three dental practices in Toronto. I'm not a dentist. And outside of that, I mentor, I have a small group of private clients that I mentor, and then an invitation group of doctors that I help with their business, building a business much along the lines of your own philosophy of building a business that's here to support a life of adventure and richness for ourselves and our families and so forth. And then the last thing that has my attention is I run I'm the chairman of an international counter wildlife trafficking operation. And we specifically protect elephant in high conflict areas in throughout West and Central Africa. So uh, elephant populations that are at risk because of civil war, disruption, political turmoil, disease, famine, drought, floods, etc. And that's I've been the chairman of that operation, started by a childhood friend now for almost a decade. So that's kind of how I got to now. I'm a proud dad of two kids, one who's currently in Uganda. I'll be going to see her in 10 days. And my son is studying chemical engineering. So, yeah, that's kind of how I got to now.
You have had a pretty uneventful life so far, haven't you?
Pretty moribund. Yeah.
Yeah,
It's
I'm so
funny.
sorry. It's so boring.
It's not necessarily, I don't necessarily recommend it. It comes with a fair amount of scar tissue, but I've
Sure.
always been just motivated by whatever seemed interesting next. And that served me quite beautifully.
What would you say like was the with you mentioned of course in your youth and I get this too, like the ambition of my and then really the pride of my 20s caught up to me in my 30s, right? And maybe you had something similar. What were some of the lessons that you learned that allowed you to kind of remain more humble?
The culture that I was raised in is because I was, as I say, of the first generation to go to mixed schools. I lived a fully integrated African life.
Hmm.
Uh, and that meant the influences of the Indibele and Shona cultures all around me. It was a population of 80,000 white people and 13 million black people. So we were a very small minority. And that's, you don't know it at the time. It's like, how does a fish describe water?
Hmm.
But in the fullness of time, especially with the contrast of moving to the United States and then looking back, we don't really know anything until we have a contrasting experience. So being in the United States, I really got a sense of the richness and depth of privilege that I enjoyed from almost an ancient culture of African wisdom. Things
Hmm.
about, say, deferring to our elders, the wisdom of an elder council, respecting your seniors, being concerned and invested in their well-being. There's a beautiful old Zulu saying that is, when an old man dies, a library burns. And so that I think that captures it beautifully in terms of how deferential we are to the wisdom of our elders. And I think that's probably uh, that's really humbling. First of all, if you look at what my parents went through, building and running a business and fighting in a civil war, while simultaneously trying to raise children. I mean, they've experienced complexities at a level that I hope to never, have the same. So I think those things have been really useful for a humility check. But I think
Yeah.
that's probably been very helpful and enriching for me. An awareness of the passage of time, playing the long game, where time is measured in the rings of a tree and not the seconds of a TikTok video. These are the things that I'm super grateful for.
Yeah, I mean, well, especially with the, I mean, we're kind of are the TikTok generation, aren't we? Yeah, especially here in America. I mean, do you really feel like we've kind of gone away from listening to the elders and those that have gained wisdom? I mean, what have you noticed for yourself?
For sure, it's been my experience. There's the United States, is not to knock it. Nobody is happier or more fortunate or luckier to be here than me.
Mhm.
And not a day goes by I'm not reflecting on just the grace of God that I get to be in the United States. It's been incredibly difficult getting here. Uh, in fact, my sister, just as an aside, give you a sense of how meaningful this is to my family. My sister yesterday found out that she has her residency application interview next month, and that will be 19 years that we've
Wow.
been working on her application to get here. She's qualified, college degree, a job offer when she gets here, a family, tax paying citizens, taken 19 years to get here. So I say that as evidence of the long game investment that those of us that come from the backwaters of the world are willing to make to capitalize on it. But
It's just easy. I mean, you just walk in. It's like getting a driver's license to get your citizenship, right? I mean, people just walk
that
across the border and get their, it's easy to get your citizenship. You don't have to be
if
illegal or
only if
anything here,
only that
right?
were true. I wish that matched my experience. Yeah, it's
I hear it
so
all the
I
time.
but to your point about kind of our seniors, there's an industry, there are entire industries in the United States that profit from the separation of the wisdom of the elders from the ignorance of the youth. Kind of retirement communities where we almost put our parents in these old chicken coops and box them up and don't visit them and don't learn from them. And I see my parents several times a week, and I'm constantly learning from them. And I wish that for my kids, I hope to be as relevant in my children's future as my parents are in my current life.
Yeah,
It's kind of a sadness. I think there's just so much wisdom in the United States that's lost in those intergenerational dislocations.
right. Yeah, I have noticed that in America, especially when I'm looking at social media and who's the financial guru, so to speak, right? And you see these 20 something year olds, which is awesome that they're doing what they're doing. But at the same time, I realize I don't consider myself an elder, although I'm almost 50, but I have been through a few different market cycles. And so I hear the things they teach, and I think, well, that's a very narrow perspective on a short little timeline. Even looking at history, even beyond myself, I know that there's a lot of things that they're missing. How do people distinguish? How do they determine like who to listen to, who not to listen to?
That is a beautiful question, Chris. I have my own philosophies about qualification to dispense advice and qualification to receive it. One of the concepts that I speak about a lot and teach a lot to clients and audiences that I engage with is the importance of understanding what a full cycle philosophy looks like, a full cycle market philosophy, a full cycle investing, most critically, a full cycle business philosophy. And so, to the point of advice, the world is awash with Johnny come lately gurus who will tell you about the incredible success that they've had in real estate investing. But
Mhm.
when you have a look at how long they've been doing it, there's nothing more valuable than a chart of an index that captures the industry this person is an expert in. And just overlay the wisdom or the incredible track record they had against the data of the broader indices. And if we did that with our phantom real estate expert, and we say, oh, they've been doing this for a decade. Well, I mean, Ray Charles could have spotted deals in the real estate market for the last 10 years. There's no degree of sophistication required in a rising asset environment. Real estate formed a double bottom, the Case-Shiller index double bottom in '09 and 2011. So we're now at the back end, I believe, of a 13, 14-year ripping bull market in real estate, where it didn't matter what you did, it was going to work out. It was just going to work out a little more in some areas than others. But this is dangerous because these individuals that have profited from a half cycle phenomenon are positioning themselves as mentors to others as we roll into the next half of the cycle. And whether that happens next year or the year after, it's extremely dangerous. It's
Mhm.
extremely dangerous. And so the first rule for me, whenever I'm taking the input and advice or mentorship of anybody, is are they a full or half cycle expert? Just that
Right.
filter alone, not just have they experienced, but have they endured and I would really wish profited from a the other half of the cycle, then we pour it through that filter, 98% of the world's experts disappear instantly.
Right.
How do we identify individuals qualified to guide us through a full cycle? Well, the entire index of our measurement of progress changes. In bull markets, we get into a world of relative return. How have I done versus the NASDAQ? How have I done versus the Case-Shiller index? In the contractionary cycle, we get into a total return comparison. How have I done versus nothing? What would have happened if I just stayed in cash? So you can see that the hybrid, bringing these two into an index to create a full cycle measure, is simply this in a sentence. You measure a full cycle value, the full cycle value of an advisor, a mentor, a coach, a guru, by going peak to peak, valley to valley. This gives us a bull market and a bear market, a contraction and an expansion. That's the only way that we know whether or not what somebody has is truly robust enough to qualify for advice.
Right. If you've been following this podcast, you're probably looking for great ways to create passive income right now, right? Well, we got you covered here with Central Lending. Central Lending specializes in alternative investments that actually are designed to create steady returns and long-term financial security for you and your family. Now, they prioritize transparency. They love, building those strong relationships, giving you that confidence and peace of mind, knowing that you have your money working harder for you, so you don't have to work so hard for that money. You want to learn more how to do that? Go to centrallending.com and check out what they've got today to create your passive income and wealth creation right now. I got to give you a huge shout out, Alistair, because as they're about to find out, it's like whether they know it or not, which they don't know. But what they don't know is that a lot of what I taught in this show was inspired by you. Not to try to make your head any bigger than it already is. I know, but because, like, for example, in March of 22, I heard you on stage, talk about cash, because at that time, everybody was saying, don't lose to inflation, don't hold cash. And I remember you were on stage at this dental conference that we were at together. And you mentioned, you said, if everybody's saying that, maybe we should hold cash. In fact, that might be the very perfect opportunity to hold cash. So I actually went back on this show, started telling people, maybe we should stop listening to what the public says, because whatever the public says, we should probably do the opposite. And therefore, we should probably be holding cash. And I know a lot of my clients benefit from that. I mean, I still invested, but I wasn't as aggressive. I was starting to build more and more cash looking forward to the point when people didn't have cash. And we're already seeing the fulfillment of that today, even 2 years later. So, even when I talk about the feds, and how the feds determine rates, it's not based on the feds driving rates, it's the treasuries, and the feds just follow suit very late to the party when they do it, but they do it. I mean, that's all that stuff I learned from you and your perspective that you've had.
That's very generous, Chris. Thank you. And while it's kind of you to credit me, wouldn't have made a difference if you didn't act on it. So the credit belongs to the person who's actually doing things, not the one talking about it. But I appreciate it.
Well, I appreciate that
That
too.
was an interesting time. I think you and I we might have also been in the same room at a standalone real estate conference back in January of 22. And at that similar time frame, what struck me at the time as such a great example is if we were to describe the ultimate contrarian asset, it would be represented by something that people own less of than ever before, that everybody tell you you're going to lose money in, that people say it's done poorly for a certain period of time, they tell you out of your mind, no one's doing it, etc., etc. And that is, you take those parameters, and we described T-bills. The mutual funds and hedge funds own less of it than ever before. Everyone told you it was going to be worthless. It had performed poorly. This is a beautiful example using social indicators, or what are called socioeconomic indicators, of a saturation of conviction, just an absolute saturation of opinion that this is the thing, this is obviously worthless. And of course, what the broader public is always doing is describing a trend that has already been in place for a long time and calling it a forecast. This only happens all the time. This is, of course, linear extrapolation. And linear extrapolation can be very profitable to the extent that you've identified a nascent trend, not a mature trend. The problem is the human brain is only good at spotting a trend once it has been in place a long time. So linear extrapolation can be very profitable. The problem is it betrays us at the turn. At the turn, as was the turn in December of 21 through Q1 of 22, that turn represented a peak saturation of conviction. And of course, T-bills have done spectacularly well since then.
Right.
So,
But it's interesting. There are people saying buy T-bills now, right? Which has already been the case. They're late to the party, aren't they?
Yeah, right in time when the Fed is chasing the market lower and
Hmm.
T-bills are falling below 5.25%, 5%, 4.6. So that's moved down.
Absolutely.
And similar phenomenon with gold, which is
Mm,
oddly enough, gold has been the number one performing asset now for 20 years,
yeah.
outperforming anything. And that's largely pointing to the protracted depreciated value of the US dollar relative to things. But interesting, yeah, interesting times.
Well, looking forward into 2025, what do you see? I mean, where do you see that people are ignoring right now that maybe could be trending in upward in the future here? Because we're really coming out of an everything bubble right now. So there's a lot of people scared to do anything.
Couldn't agree with you more. Uh, I'm not a contrarian on principle because that's expensive. To just do the opposite of what everyone does, you're going to get your butt kicked for a long period of time. And
Mhm.
right when you start getting close to genius, you're going to throw in the towel. So being a contrarian on principle is expensive. Having said that, I believe that the larger shift, the macro shift, continues to be, and it's gold is signaling to this to us, but a shift out of paper assets into hard assets.
Mm.
Uh, that's one trend. Another that, and it, beautifully, the social indicators are flashing green across the board to me, red across the board to everybody else. If we were to describe an environment where where property prices have collapsed, where companies, say the largest publicly traded index has been in a bear market for 17 years, where there's questions about the currency, where the government is stepping in with stimulus, where we've got a record number of bankruptcies, and everybody is convinced that it's finished, it's over. We've just described China. I'm
Mm.
extremely bullish on China. I'm specifically
Interesting.
bullish on the most risky aspects of Chinese equities, which are Chinese internet stocks. These things have been bludgeoned. They're on the backside of a 17-year bear market,
Mhm.
and I'm long-term very bullish. We've seen a strong spike out of the bottom in the last 3 months. It's going to be a stair step event, but I think this is a multi year opportunity. I believe that gold and silver mining stocks have got a huge gap to close between the precious metal itself and the miners. I'm very bullish about those. But then beyond that, I'm identifying massively beaten down asset markets. Back in spring, at the same event you and I were at, I was making the case for Hong Kong equities, which were trading at 30 cents on the dollar of their net asset value.
Mm.
So I'm a fan of Hong Kong equities, Chinese equities, but most specifically, probably the most beaten down sector that nobody is believing in is the thing that was all the rage 10 years ago that now everybody's moved away from because it's been decimated 80 to 90%, and those are rare earths, specifically lithium and the broader cluster of rare earths. So I'm bullish on those. It's early days. I don't like catching a falling knife. I believe the knife has fallen. I don't know if it's hit the ground yet, but I'm watching for entry opportunities there. So on the macro, so these are all larger trends that I like. I'm
Mhm.
also very bullish on certain aspects of Latin America because of the commodity boom that I believe the CRB index is forming a stronger turn up. Again, this is going to be a multi-year event. So, if somebody don't call in a week and say it hasn't worked out. Uh,
Not
but
overnight.
yeah, right. This is going to be, because that's where money is both made and lost is over the long pull. So these are all trends that I like of increasingly moving toward hard assets.
Gotcha. And so that I was going to ask you that next question is how you define hard assets because paper assets I see as stocks, bonds, options, savings, CDs, things that are ultimately usually traded in the markets. But you're even saying these could be things that have a hard asset backing to them.
Yeah, they do. So we've got tradable paper that are essentially proxies for the hard assets themselves. I don't expect anybody to try to keep yellow cake uranium in their fridge, but there are proxies, there are ETFs and so forth that we can start to slowly build positions in over the long haul. Rare earths, I think of REMX or Romeo Echo Mike X-ray as a proxy. It's not a recommendation, but it's an example. Lithium, similar thing. I think LITH is one ETF. So there's a lot of ways that we can capitalize on this. Again, this is a long game. These will be traded positions that I'll be building into over the next period of time. It's not a, sell everything and buy these type situation.
And do you think real estate in general is defeated? Like it's done, it's over with, or?
No, I think that housing affordability in the United States is, there's a reversion to the mean. Wherever I can, I like to ignore my own opinions and just pay attention to data. The problem
Yeah.
is a lot of data requires an opinion, and that can be dangerous because we betray ourselves. We find what we're looking for, and that doesn't help. Having said that, my favorite sort of data is reversion to the mean data, even if it's slow, like the unemployment figure.
Hmm.
And so reversion to the mean in home prices shows that we are at record unaffordability in the United States. And of course, the perma bulls will say that's because so rentals have to rise. Well, rentals are not going to rise so long as unemployment is rising. Unemployment
Right.
bottomed back in July at 3.5%. We've now crested 4%. So that larger trend has turned up. You cannot push heightened uh, uh, rental rates onto an increasing number of the unemployed. So that doesn't
Right.
support. The alternative is reversion to the mean. How do we get back to it? It appears to me that US home prices need to come down, and I think fairly meaningfully, just to reach that affordability plateau. Having said that, there is a most unfortunate thing that has evolved in the United States over the last 30 years, which is this massive shift where housing has gone from shelter to a speculative asset. And
Mm.
that's destroying a lot of families. It's destroying a lot of intergenerational um, homesteading and so forth. But who knows? Maybe so. I'm concerned about that. Commercial real estate is, of course, making its own bearish case as we
Hmm.
speak. Um,
Absolutely.
but yeah, yeah.
Good to hear. Now, I want to kind of go to this topic of uncertainty, and I know you have a lot to say on this, and I know we're kind of gone over our time we were planning on, but I want to make sure we get this addressed for everybody. But I want to kind of I want you to kind of describe what you dealt with in Zimbabwe, specifically like how often you had to pay your employees and deal with that hyperinflation, and what that taught you about uncertainty and how you've been able to become almost anti-fragile as a result.
It's what we struggle with in this desire for. It's interesting. I think there's nothing more dangerous than uh, a professional athlete that's never lost.
Hmm.
There's nothing more dangerous than a prize fighter that has won every fight. Because what it does, of course, is it fails to train them for true adversity. So we think about uncertainty versus certainty. It's important to remember these are just feelings. And so what we're pining for is a feeling, and we're hoping that the outside world can give us that feeling of certainty. In Africa, it's just a fallacy. I mean, nobody's wasting their time expecting the central bank of Zimbabwe to do something logical.
Hmm.
But the United States, because of the robustness of its economy, its military, to a certain but deteriorating extent, its social cohesion. The United States has enjoyed an absolute privileged position ever since the post war period of 1945. And with that comfort comes entitlement. And we know this. We just look at friends that we have whose children are being raised in opulence. This makes for a fragile child. They're incapable of replicating the successes of their parents. This is not a safe bet. I think what we really overlook is the power and value of the hormetic response. The basis of, and of course, the word vaccine is so provocative today, thanks to our recent uh, experiences. But the premise of a vaccine is a small dose of poison, just a small enough dose that your body can, in its immunological defense, step in and create a counter strength, a counter narrative to offset it. And that's where a robust immune system comes from. Using children, for example, there's nothing you could do that will debilitate your kids' robustness than raising them in a bubble with no dirt that they ever touches them, a sandwich they never eat off the floor, a dog that never licks their face, whatever the case might be. These stimuli are building their immunological library. And so, to a certain extent, the current American generations have enjoyed 44 years of declining interest rates, rising asset prices. We are a fighter that has never lost a fight. There's
Yeah.
no there's no system, there's no individual I know out there that has lived experience of navigating rising interest rates over a large secular cycle. There's nobody out there because they would have had to have been around and in the business from 1968 to 1981 or
Mhm.
82. They're not in business anymore. So I think about the uncertainty that we enjoyed. It was constant. I mean, unrequested doses of hormetic poison, every day. What's going to happen today? Is rockets coming over, tanks driving through our town, sleeping with guns under our beds.
Mhm.
Fast forward to the late 90s, early 2000s, Zimbabwe's hyperinflation had gotten so bad that when you went out for dinner at night, you had to pay for the meal when you ordered it because it cost more when the meal arrived. I mean, talk about the velocity of money.
Yeah.
If you had employees, you would pay them twice in a day because what you paid them at lunch would not buy their family dinner that night.
Wow.
The collapse of the currency was so rampant that everybody was aware of it. I mean, everybody was connected to the value of the Zimbabwe dollar at all times. We could give quotes intraday. What's it at? Oh, what are you seeing? Oh, 3,000 to 1 to the US dollar, whatever the case may be.
Mhm.
You're running 18, 19, 20 million% inflation.
Wow.
There were actual, I mean, there was memes about it almost of how it wasn't worth buying toilet paper because the paper that you used was worth less than the toilet paper itself. These were crazy times.
No kidding. Well, last question for you. Well, before I get to this last question that I want to ask you here, what's the best way if someone wants to follow you, right? If they really want to do that, what's the best way they can do that with you, Alistair?
It's kind of a standing joke. My clients joke that I'm black ops. I don't ever show up anywhere, but I'm trying to make a more concerted effort to contribute to others.
Uh-huh.
I have a new podcast actually that I'll be launching here in the next several weeks called The Sovereign Guide, talking about these types of things. Outside of that, Facebook is an easy place to find me, and Instagram is also a good option. I think they're probably the best spots to find me.
Great. Yeah, we'll be sure to put that in there, especially with the Sovereign Guide. We'll want to make sure we put that in there to promote your podcast because I can guarantee if they're here right now, they want to follow it. They want to know what else you have to say because we definitely don't have enough time in this episode to ask you everything we could possibly ask you. But no, I really appreciate
Thank
your
you,
time
Chris.
here. So, final question for you, Alistair, is obviously this is the Money Ripples podcast. We're talking about create a ripple effect through people's lives and talk a lot about like what are we here on the planet to do, right? What's our personal mission and that sort of thing. What do you feel is your ripple effect, your personal mission that you have here?
Oh, goodness, that's a tough one, Chris. Uh, I really can only speak to what motivates me,
Mhm.
which has changed over time. Of course, I'd be lying if anybody who says they're not early on in their life, aren't driven by the need to secure their financial future is either disconnected, someone else is paying their bills, or they're not honest.
Mhm.
So my motivations have changed a lot, but I definitely feel compelled to take care of my loved ones. That's first and foremost. The people in my immediate circle is the most motivating force for me to make sure that they are loved and supported in a way that doesn't insult their abilities, but just supports them in their pursuits and so forth. And that's an ongoing battle of relevance. I need to stay relevant to my parents, to my kids, to my clients, those that I serve. So staying relevant and staying contributory is that's definitely the thing that I hope to, if a legacy lies in my future, that's what is that I would have been someone that made a difference for others.
I love it. Well, Alistair, I really appreciate you being so generous with your time today and sharing so much with us. I know I got a lot out of it just listening to you once more.
Well, thank you, Chris. I appreciate your kindness and generosity and the invitation to be here. I'm glad we could make it happen at last. Let's maybe not make it the last time.
I agree. Absolutely. We'll definitely have you back again.
Beautiful.
Well, everybody, be sure to follow Alistair and his new podcast. And here's the thing, guys. He said it earlier, right? Is that it's one thing to hear what Alistair has said. It's another thing to actually act upon it. And that's what makes the difference in your life is what are you going to do with the information and the things that you're noticing right now? How can you use that to change your life for the better? Go and make it a wonderful and prosperous week. And we'll see you later.